Chasing big moves like this is going to get you smoked in the market. Instead of trying to find an entry in this chop, what you want to do is actually find the trading range for that day. This area is typically going to be the first 15 or 30 minutes of the market, and you want to make sure that price breaks out of it. See, most traders would have gotten stopped out in this area right here because they have no idea where to get into the trade. Instead of catching the entire move, we only need to catch a piece. Let's think about it. If we're entering our trade off the impulse of this candle, we need to find an actual stop loss that makes sense. If we put our stop loss below the candle, structurally that doesn't make sense. You want to put your stop loss below the swing low. This trade doesn't make any sense. We are risking more than we would make here. Now, if we respected our zone, this would be our no trade zone here. Now, after we break out our zone, we can now enter this trade at an easy 1-to-1 risk reward ratio. We're targeting this resistance level and our stop loss is going to be below the support area. This trade makes sense. Now, even if we miss this trade here, we could have waited till price pull back to this key level here and entered another 1-to-1 risk reward trade.
New York session comes in, there's one candle coming down, or there's one candle coming up, one candle coming back down, and then we got another candle coming back down. This is 10 o'clock, so we're 30 minutes into the session, and then look, price starts pushing down, pushing down, pushing down, because you're trading with the volume. The volume, as long as you're on the right trend, so if you're looking at the right analysis, the right trend on the higher time frame, you see I'm on the 1 hour, I can go to the 4 hour, you're still gonna see the same thing, right? You're still gonna see that same thing, that same setup. So you can see here, under this level, we had an indication, price corrected back to that level. And as you can see now, price is coming back down to create that new lower low. All this is done on the higher time frame. As long as you're right for the higher time frame analysis and looking at your swing highs and swing lows, I'm gonna turn this off and I'm gonna turn this back to green. I'm gonna turn this back to green so you can see it. As long as you are following what price is giving you, showing you, you are going to be okay.
Now, first off, I want to thank Coach Bree and Trades by Side for breaking down how important the orb is, how waiting for a setup and waiting for the first 30 minutes to an hour in the market is crucial for your trades. So you can either trade the 15-minute orb or you can wait for the 30-minute orb to get a bigger time frame for your structure. Now, when utilizing the higher time frame like we are on the 4 hour right now, the first thing that I recognize is the McDonald's. I see the M right there. That is the first thing I recognize. I see it close below the neckline, continue to push down. And then we have a buyer's level and the seller's level. It breaks below the buyer's level. It gives us an indication, correction, and continuation, and pulls all the way down to the downside. So the sell was initiated right away from that double top, the McDonald's on your left, and they continue to push down. It consolidated, then gave us the ICC setup, the indication, the correction, and the continuation to the downside, while creating lower highs and lower lows for the market structure all the way to the downside on the 4 hour time frame.